Dan Clifton is head of policy research at Strategas. Dan, good to see you again. Is this $1 trillion we already know about, or is there new details, new information, new things in here?
Yeah, I thought the president's speech last night, a theme of that speech was we did a lot in 2025, and you're going to start getting the benefits of that in 2026. So, he passed one big, beautiful bill. The income tax rate was not cut. So people are going to get that in a tax refund as they file their taxes here in February, March, and April. And it's really large. It's $150 billion of new tax cuts for American workers that they're going to feel this year. And you have 100% expensing of capital equipment and R&D and property. So you're going to get about $200 billion on the business investment side. I saw the headline coming out of that reporter's lunch about tax cuts. And my view was this isn't going to be income or corporate. They don't have the capacity or the votes to do it. But will the president put out zero capital gains taxes on inflation or zero capital gains taxes on home sales, of which he did neither of those last night and really kind of stuck to the basics? He is not a long laundry list person of policy ideas like Bill Clinton or Barack Obama. And he basically just stuck to kind of his core principles and was basically preparing people for better economic growth this year rather than saying we need to new things.
Yeah, and when he says through reconciliation, what does that, I was trying to think to myself, okay, what does that mean? What is that telling us? And is it what you're saying in terms of the areas where he could move without that broad support?
Correct, right? So budget reconciliation is a way to pass legislation with just Republican-only votes. But right now, the Republicans have a one-seat majority in the House. And if this congressman from Texas resigns anytime soon, given his problems, then you can wind up seeing there'll be more Democrats than Republicans. Now, they wouldn't have the majority and it wouldn't replace the speaker because of technical factors, but they're not passing anything right now. And I'm not very confident of that. So it's going to be smaller measures. They'll do a housing bill that's passed the House and the Senate. They'll do an extension of the infrastructure bill. They may do this crypto bill. But the agenda here is not for very large new tax cuts after passing such a big reconciliation bill last year.
Let me ask you then about what you think are the two most significant things last night. Number one, talking about Iran building a missile system to attack the U.S. Secondly, you said the most serious policy proposal was the payer protection pledge. So first on Iran.
Yeah, so I would just say I think a lot of the commentary this morning misses what happened in that speech last night. The president gave you a pretext to be able to attack Iran if those negotiations today don't work out. And that's the idea of building a missile system that could hit the United States. We already know that they're building one to hit Europe and, of course, our allies in the Middle East. But the idea of going to America is a new discussion that they're having and one that starts to give that pretext. That's number one. Number two, Eamon just came on and said, look, they didn't talk about AI. AI is extremely unpopular right now with voters, and there's a lot of local opposition. What the president was doing was giving you a way around that by saying these tech companies are going to be able to build their own energy and remove that from the ratepayer themselves. So I actually think there was something in there for AI, specifically about building the data centers and trying to get around some of the local opposition. I would note housing stocks are down big today because they were anticipating a plan. Defense stocks are down because they were anticipating a plan. But the banks and the cards are up because there was no talk about credit card caps or interchange fee regulations.
Yeah, I wasn't sure if
there is definitely stuff trading on last night's speech in certain sectors.
I thought housing might be. Lowe's gave this kind of, it wasn't very upbeat about the housing outlook. That stock's down 5%. But you're saying it's more because he didn't come out with a big plan that was going to kind of unleash this wave of building. But that's the stuff that you just said could actually make its way through Congress this year, one of the few areas.
Yeah, manufactured housing. There will be a manufactured housing bill. It's a very specific bill. I think what the president is doing on rates through financial deregulation and what he's doing through the GSEs with the agencies purchasing mortgages are far more important for housing than any State of the Union proposal. Sure. You're seeing the mortgage to treasury spread come in as those agency retained portfolios go up. Nobody's talking about that, and that's one of the reasons why mortgage rates are at their lowest levels in 4 years, and that's where their focus is, rather than on a 10-point housing plan, which the market was anticipating. One of the reasons why the housing stocks
I'm turning you into like a stock picker today, Dan, but there's one more sector that I do want to ask about, and maybe this is going too far, but financials, you bring this up and say one of the most important things that's going to happen is trying to bring down that mortgage rate, bring down rates. And we've keep hearing that the big priority at the Fed is going to be financial deregulation. So did the stocks just buy the rumor, sell the fact? Because the financials have now been trading very, very poorly. Maybe it's AI. I don't know if you have an additional thought about that.
I do. I don't think that the bank stocks are related to financial deregulation. The bank stocks are trading on the yield curve. The yield curve is flattening. That's not good for bank stocks. Now, at times, you'll separate from that based on what Trump is proposing. And, if you're going to cap credit cards, you'll see bank stocks even weaker on that. But I don't think it's about buying the bank stocks. I think it's about being able to get rates lower and what that's going to mean for the U.S. economy and the ability of Treasury to be able to finance our deficit. I like to call it like privatizing the Fed balance sheet and being able to start taking some of the burden off the Fed if you do that financial deregulation. So the benefits are going to be more macro and less about buying the banks themselves from this financial deregulation.
Even more.